Now, we're still, of course, in Africa's largest economy, as it were. This time, however, looking at some macro data coming out of it. Annual inflation accelerated to 17.6% in August, hitting a fresh 11-year high. This is the 7th consecutive monthly increase in headline inflation. Now, that persistent rise has been attributed to higher prices in electricity, gas, transport and food. Nigeria has seen its economy slide into recession for the first time in more than 20 years, largely due to the cut in oil revenues and dollar inflows as oil prices fell from June 2014. Revenues from crude oil and gas sales account for about 70% of government revenue. Now, these problems have been exacerbated by a spate of militant attacks on oil facilities since the start of the year. Let's get a better understanding of where exactly Nigeria goes from here. I'm now joined live in Lagos by Olusegun Omisekin. He's an economist with the Nigeria Economic Summit Group. He's live in Lagos, as mentioned a little earlier. Thank you for your time this evening, sir. Do you, as an economist, expect the MPC to perhaps raise rates in their meeting on the 20th of September?
Yeah, thank you very much for that question. You must also understand why we have the situation where the MPC had to increase the rate to the present level. And you also see the reaction of the people towards that action, because we believe that increasing the rate to this present level will also kind of jeopardize government's plans and intention of reflecting the economy. So we don't really expect the Monetary Policy Committee to further increase the rate. We actually expect the rate to be lowered or at least left untouched. So this will be necessary, because if you increase the rate further, of course, in your plan of your own way of trying to arrest the inflation, you are going to also affect the present situation we are facing a recession. So it is expected that you reduce the rate to make sure that people come in, the investors come in, and then the cost of accessing funds also is lowered, and by that you are trying to make sure that the businesses and private sectors activities are increased.
Indeed. Let's dig into the inflation numbers, however, that came out. A lot of the food consumed in Nigeria, like rice, for example, that's imported. Nigeria is one of the biggest importers of that commodity. Does the relative stability we've seen in the Naira, in the official market, perhaps point to possible stability in future food imports? Or does this continued dollar shortage mean these prices are actually just going to keep rising?
Yeah, of course, even when you look at the situation we are in now, you also understand that the type of recession we are facing is not just on the supply side. It's both supply and demand. Our domestic production or productive capacity is weak and it's very low, and that is known, of course. And you see the rate at which we consume, the rate at which we import, of course, recently has also been on the lower trend. And so we believe if this measure is sustained, you are still going to see some level of balance in Naira. But going specifically for in the case of rice, the only solution to the huge bill on rice consumption in Nigeria is to grow her domestic production. Nigeria cannot afford to continue to import rice at that level, at that rate. So, and I know going about this thing is not going to be a sudden miracle. It's going to take some time, because you are to look also at the time lag of the policy. You have to look at the environment. You have to look at the ease of accessing funds, as we have discussed. So we believe that if you increase the production of commodities, especially rice, at this period, we are going to see a significant impact on the value of Naira, and not to talk of other drivers of Naira. This time around, the oil price has fallen, so we don't have a situation where we can keep having. So I strongly believe that increasing in the rice policy in trying to boost rice production domestically will be one of the ways out.
Indeed. One last question for you. It does seem like this rise in inflation has somewhat tapered off. What's the outlook for inflation for the rest of the year, especially in Q4 heading into 2017?
Yeah, if you look at the main drivers of this inflation, you will see that consumption of commodities is part of it, And you also see that the crisis we went through with respect to the exchange rate, forex availability, and domestic ease of doing business, the environment, all contributed to this pressure that we are experiencing now. So we believe strongly that if the MPC is able to maintain or sustain this rate, the MPR, we're going to see a moderate inflation month-on-month rate, such that we can easily predict and say, okay, maybe we are getting out of this inflation pressure. But if the rate is increased, and again the domestic policy is still, continues in such a way that the clarity is not there, I'm very sure that we're still going to be experiencing higher rate of inflation. Because if you look at what the government is trying to do now, you must ask yourself that for us to address this issue holistically, we need to bring together the side of the monetary and the policies and the fiscal side. So if the government is trying to say from the fiscal side, I'm going to pump out money, I'm going to do this, I'm going to make sure that expenditures and spending, everything is coming out, and the monetary aspect is trying to complement that, then that would be a good news. But a situation where the monetary aspect is not conducive at all, we're still likely going to see an increasing trend of inflation. So for now, to the rest of the year, I don't want to believe there's going to be any meaningful or significant change in the rate of inflation Nigeria is currently facing.
Indeed. We'll leave it there for the time being. Thank you for the insights there. We've been speaking to Olusegun Omisakane, an economist with the Nigerian Economic Summit Group. He was live, of course, in Lagos.